Hello traders, you are highly welcome in my channel, and in case you are brand new, you are exactly in the right place where we learn forex and get to be more informed into detail about forex trading. Here we see the forex chart, and we also learn the theory part of forex trading. It's not only about the chart and the analysis, but also it is good to be equipped with the theory part of forex. However, the main reason for this channel is to teach you how to make profit, using forex pip. But for now, we are going to see the theoretical part of forex, and then we go into the chart, and I'll show you the trade that I took last week on Thursday. I was able to make some good profits, and I wanted to show you exactly how it went, and then we shall also do some little analysis about that trade. But the main topic of today, we shall cover about forex pairs with the main potentials in 2025. This means that the forex pair that can make you a lot of money in this year, and these are the pairs that you should focus on and trade them carefully and properly, and I believe that you will make a lot of money from these pairs. And also I will tell you why they can make you a lot of money this year. So let us dive in. One of it, we have Euro USD. This is one of the most popular pair that traders trade, and they also make a lot of money out of it in case you have a proper strategy or a moderate strategy with proper risk management and money management with solid emotion and psychology. This pair can make you a lot of money because it is globally traded and it offers very high liquidity with a tight spread. This pair is influenced by economic indicators from the Eurozone and the US, making it ideal for both beginners and experienced traders. Those are the reasons why you should trade Euro USD pairs. The next one, we have GBP USD. This is a Great British Pound and US dollar. Why should you trade this pair? This pair is known for its volatility, and it responds sharply to economic data release and interest rate changes, and also geopolitical events like Brexit. Its volatility presents opportunities for traders who can manage the risk. The next pair, we have USD JPY. This is US dollars and Japanese yen. This pair is often used for carrying trades due to Japanese historically low interest rate. It's also sensitive to global risk sentiment and the economic data from both the US and Japan. The other pair also, we have USD CAD. USD CAD is closely linked to oil price, as Canada is the major oil export movement in crude oil price. This can lead to significant fluctuation in this currency pair. We also have the AUD USD. This is Australian dollar and US dollar. The Australian dollar has surged nearly 12% since April 2025, driven by strong commodity price and strengthening Chinese currencies. This makes AUD USD pair to watch potential gain. We have USD Swiss francs. The Swiss francs is considered to be safe haven currency. USD Swiss francs can be influenced by global risk sentiment and central bank policies in both the US and Switzerland. Like the content, subscribe also in my channel, and then you share with your friends. Last, we have New Zealand USD. The New Zealand dollar is sensitive to global commodity price and risk sentiment. It is also influenced by economic data from both New Zealand and the USA. So in this video, I have really explained to you briefly why you should trade these pairs. In case you have not understood, rewind the video and then you watch again. I'll be happy when you subscribe because it will support the channel and also motivate me to give you more content. Yeah, so let us go in the chat and then we see the other trade that I had last week. Yeah, traders, here is my trade of last week. As I have told you from the beginning of this video, that I had a trade last week, and it was on Thursday. However, on Friday I didn't trade. Yeah, I wanted to show you actually the analysis how it went, and this is the analysis that gave me a lot of profit. Yeah, and I believe that one day very soon I'll be trading with you guys together, but for now I'm still trading alone. I'm still hustling alone, and I'm not interested to mentor anyone yet or trade with anyone yet. Just still sorting out myself. But when that day comes, when I'm ready, and then we shall probably go together. Yeah, so let us do some simple analysis, and we see exactly why I took the trade and how things happen. So for me, I normally do top-down analysis. Yeah, so here we are on one day. On one day, you can see it was uptrend. As you can see that I've made this trend line here, but then eventually it started to consolidate in this area. Yeah, so if we mark our area of consolidation, you can see that the consolidation was there. The trade was going nowhere. It was just consolidating around there for a while. Yeah, but that one is only on one day. Then let us go to 4 minutes and we see into detail what will happen. So you can see our consolidation area here. It was very long. Yeah, it kept consolidating here, but also in this consolidation you can also decide to trade it because I was on one day. That's why you saw it was quite small, but when you keep going on lesser time frame, then you can see actually that things are magnified and can be actually traded. Yeah, but then after consolidation, the trend, it actually broke and started making higher high and higher low. Yeah, as you can see here, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, making the uptrend, which you can easily trade it properly as well. Then on 1 hour, you can see that we have left our consolidation area here, and then we kept moving uptrend. Yeah, on that uptrend, if you go to 30 minutes, you can see that it made a very serious trend, as I've marked for you already. Yeah, so but then on this trend, this is now where the issue came from. Yeah, I actually waited for the breakout of this trend. I marked my order block. Yeah, I marked my order block here, and then it was correlating with my trend line. Yeah, or it was correlating with my resistant. Okay, this was my order block, and then it was correlating here. So I waited when the price moved all the way from up here. But at first, when the price came up to this resistance, I wanted to buy. Okay, in the midst of buying, I'd set like that, aiming for this part. Okay, aiming for that area, and I was just waiting for the confirmation. But then when I saw the price pierced through, I was like, no, I'm not going to buy. Let me just wait for the confirmation to see the direction of the market, where it will go. But then I saw the price was making this bearish candlesticks. When the market starts making these bearish candlesticks, it generally means that there will be a continuation down, because those candlesticks were just in line to each other. The market could make a candlestick and then closes, makes another red one, closes, another red one, closes. So this one started now indicating to me that the price will pierce through the resistance and continues downward. And then I was like, okay, let me sell here. But I made sure not to go with a lot of risk to reward ratio. I just took 1:2. Yeah, so the price didn't respect my order block and didn't also respect my resistance, but it just went through. And I saw the confirmation from these candlesticks that the market will surely sell, and therefore I also had to sell it on 15 minutes. You can see on 15 minutes it's really much more clearer, and it indeed came up to my take profit and it hit without any hesitation. But then after that it kept moving its own way and I did not trade. And then today, Monday at night, the price skipped. Yeah, it skipped all the way from here up to this level here. But then next week I'll wait and see how this price will move, and then I will target it to start trading again. Yeah, so traders, if you've liked the content, subscribe, like and share, and I will see you in the next content. Bye.